Any company, any innovative company with a new business model has had a hard time convincing investors of the new way that they're making money. 2012 seems like a long time ago, but that's when Facebook went public and their shares were down more than half just in 4 months. So I think it's just a mindset that public investors need to grasp. We also have a different, on the private side, we have a different time frame where we talk about lifetime value of a customer versus quarterly earnings.
Gwen, clearly a lot of people focusing on the fact that both Lyft and Uber, which are down, are ride-sharing companies. The other thing they share is that they're relatively old companies, 6 and 11 years old, respectively. Does Luckin have an advantage, therefore, by being so young? On one level, it's quite scary. It's a short history, but on another, the sky's the limit because we don't really have anything to compare it to.
So China moves at a different speed from the US. China probably moves at 20 times the speed, and the valuation is probably 20x as well. So I wouldn't compare those two. But to your question on Uber and Lyft, Uber might sound expensive at $70 billion, but UPS is $86 billion, right? So would you rather own UPS at this point or Uber, which is a new form of logistics and transportation company that has de-risked the maintenance and ownership of actual physical fleet? I would take Uber.
That's an interesting comparison right there. I want to go back to something you just said before, though, Gwen, and that's the idea that in the private market, there's this focus on the lifetime value of the customer, I think is the term you used, right, versus quarterly. There's a lot of focus on valuation right now with these companies that have already gone public. Pinterest is a great example, right? You did see very strong top-line growth. You saw monthly active users increase, yet because of that wider than expected loss, stock selling off pretty dramatically today. Do you think that's why there does tend to be, at least with some of these names that we've seen go public, like Uber in recent weeks, why there does tend to be this, I guess, discrepancy between how the private market has been valuing versus the public?
You're absolutely right. It's a difference in mentality. The public markets, we have to model out cash flow, and when we don't have cash flow, the analysts sort of struggle, right? And so that's why you have a lot of holds, you have a lot of sells, and it throws the valuations into disarray. But if you really think about, if you're transforming, the venture capitalists are not just buying software. They're buying software that's transforming the old industry. So if you think of it that way, you start comparing the market caps to the older industries that they're actually disrupting.